In this video, we'll continue with types of deferral entries and talk about another deferred entry in the prepaid section, which is prepaid rent. We did prepaid insurance and now we'll do prepaid rent. And it's going to be very similar. You'll see here we debit the expense, rent, insurance, etc., and we credit the prepaid, right? So that's what we're going to do, which is the asset account. All right, so let's look at the scenario. So ABC Company purchases 12 months of rent for $3,600 in cash. Okay, so ABC Company is buying or prepaying rent for 12 months with $3,600 in cash, and it could be anything. It could be they could be renting a piece of equipment, they could be renting a small space, they could be renting some time, whatever it is, doesn't matter. So they purchased 12 months of rent for $3,600 in cash. All right, so we can do this entry really simply by looking at the journal entry handout, right? So we've got an exchange of rent, rental time for cash. So cash is going down, so cash is an asset, so that's a credit to cash. So I'm gonna go here and I'm going to credit cash for that amount, which is gonna be $3,600, right? That's the cash amount that I credit. Okay, now, what am I getting in exchange for cash? Well, I'm paying for insurance ahead of time. Well, what account, not insurance, rent ahead of time. What account is that? It's prepaid rent. So we have prepaid rent account here. That is an asset. It's increasing, so I debit that amount. All right? So now I need to post that. So over here, I'm going to put 3,600, and you'll see my account increases to 3,600, and my cash, I'm going to credit that for 3,600. And so some of you may ask, well, where is that? Where is this $3,600? Where's this $10,000 coming from? I just put a balance in there because I didn't want to have a negative cash balance in this example, right? So let's assume we start with $10,000 in cash. I give you that number. It could be anything. It could be 50,000, 100,000, a million, but in this case, it's 10,000. All right, so that's the initial entry. The original entry is we debit prepaid rent and we credit cash. Okay, so now we get to the 31st. What happens on the 31st? Well, from January 1st to January 31st, I use up 1 month's worth of rent. Not 12 months, but 1 month's worth of rent. Here's the other thing. On January 31st, I do not make another payment. That's very important. I'm not paying for rent again on January 31st because I already paid 12 months worth of rent on the 1st. So I'm not making another payment. So on January 31st, there is no cash entry. I am making an adjustment because I used up 1 month's worth of rent. If I look at my prepaid rent account on January 1st, it has a $3,600 balance. I get to January 31st, it still has a $3,600 balance, which represents 12 months worth of rent. Guess what? I don't have 12 months worth of rent anymore on January 31st. I have 11 months worth of rent, so I have to adjust this account. It has to come down to reflect that I used up 1 month's worth of rent. Okay, so first let's figure out how much is 1 month represent. So if I do 3,600 divided by 12, I get $300 per month. So I'm going to use up $300 worth of rent. Okay, so first thing I can think of, well, I know my prepaid rent has to come down by $300, right? It has to decrease by $300, so I use that up. So I'm going to credit prepaid rent for $300. So notice I'm now at $3,300. So I'm going to go here on credit, prepaid rent for $300. So you'll see this balance represents 11 months worth of rent. Well, what happened to that rent? I used it up. And in the previous example, we said when you use up something, that is synonymous with expense. So over here, I'm going to have rent expense for $300. And notice, just as we said, the prepaid rent is an asset. The asset used up becomes an expense. So an expense is an using up of an asset. When we use up an asset, that's what we call an expense. Okay? So whenever you see anything expense, that balance reflects what has been used up or consumed by the entity. So I'm going to go here and I'm going to debit rent expense for $300. And that's the adjusting entry, okay? The original entry is the debit prepaid rent for, and then the cash is the cash transaction taking place first, and then after the cash transaction, we have the actual adjusting entry. So in these deferral entries, this cash transaction is not the adjusting entry. The adjusting entry is what happens on the 31st, where you adjust the rent expense and you prepaid rent. Again, we're adjusting an asset account. The asset account goes down and the expense account goes up.